Hello, everybody. Hello. Good Tuesday afternoon. I hope everyone is okay. Boy, after seeing the last 2 days, Friday and yesterday, with the massive moves, just seeing S&P's down 20 points right now is really no big deal. So, see what happens. I know there was a lot of talk from President Trump this morning about tariffs, ISM manufacturing, which is a big economic data point to look at how the manufacturing sector is doing. Came in really weak this morning. Maybe that's playing on the markets a little bit here, but you know what? It's all good. It's all good. It's a beautiful day here in Chicago. I'm a little dismayed at the Cubs game last night, but gotta stay positive. We'll get hopefully back at them tonight. All right, everybody. Topic of the day today. What's up, Steve? What's up? Yes, smash away, everybody. Please. All right. Topic of the day. Everybody has been talking about AMD now. AMD's earnings after the close today. So what I thought that I would do is we would literally have a live deep dive into AMD and what we might be doing or not, but what the possible setups might be. And I think I have the wrong screen showing right now, so hang with me here, everybody. Stop screen and share screen. I put up the wrong guy. There we go. That is so much better. Let's get that one up there, Michael. There we go. All right. Now we got it. AMD, Advanced Micro Devices. I mean, what a run. You talk about stocks that have made recoveries and then some from that April, beginning of April tariff sell-off. Check this chart out, everybody. AMD traded down to $76. $76 on April 8th. Hit a peak of 182, and we're sitting right now, at 175. I mean, that is just unbelievable. And that big drop here, that was the low point in 2 years. Now, you could say, just going back in time here, that when AMD dropped right here to that 95, 96 level, that absolutely was big support. Because going back 2 years, you had that same support right here. Okay. And it held there. It held great. Look at that rally off of that, but then got derailed because of the tariffs. Okay. And then literally it's been a straight line up. So, looking at the chart, kind of hard to, not be bullish, but I'm not sure that technically there's a lot there. So what do we have to look at? What strategy, if any, would we look to possibly employ for AMD earnings? So these are the ones that we typically look at. Not that there aren't other strategies out there. We could just do a basic call spread, put spread. We could put on a butterfly. We could try and sell an iron condor. We could do a call or a put calendar. We could do a call or a put diagonal. Those are really kind of the buckets of the strategies to choose from. Not that we can't modify those in any way, shape, or form, but that's really what we stick to. And those are the, pretty much the easiest ones to employ and to understand. So what do we need to do to determine what we want to do? I mean, it's no different than looking at any other stock. We have to look for stock chart patterns, direction, bullish, bearish, neutral. What is the expected move? Where is our implied vol? We know in the case of AMD, because it's earnings, it's really expensive. So we have to factor in the IV crush. And then, of course, we need to look at reward to risk. Okay. So with that, let's dive right in. If I look at this chart here, okay, if I look at this chart, the only thing that sticks out to me, and I'm going to look back here in time a little bit, and then I'm going to shorten up the window that we're looking at. But the only thing that sticks out to me, this here, and then failed to break through right there. Sure, we saw this, big pop up here, which this was in March of 24. And just as we saw the big drop off down here, and that, support had really held until then, kind of the same thing with this resistance here. So I'm not saying that AMD can't get past this at all. Yep. The aluminum buzzard, Robert. Okay. But if I look at this technically, that's really the only thing that I see here. Does anybody else see something that I might be missing? And now we're going to look at implied volatility. Okay. Outside of the tariff volatility, which is right there, so we're going to discount that. Okay. AMD has been pretty darn consistent with where vol spikes to prior to earnings, where it bottoms out. Okay. So we really have a very, very distinguishable range for implied volatility. 55 on the top end, 30, we'll call it 36, 37 on the bottom end. This is really, really an incredibly fair estimation of vol. This is over 2 years also. So there's a lot of data there. Now, let's shorten this chart up. Let's go back to the stock chart for a second. Shorten it up to 6 months. Okay. Gives you kind of a different look at it, right? It's been just a big, big, big stair step climb up. But again, if I look for other markers, support, resistance, gaps, anything like that, I don't see any. So if we look at the implied vol over 6 months also, a little bit more difficult to tell that really, really distinguishable range. So maybe we go out to a year and now you can really see that. So does everybody understand kind of what I'm looking at? The way I would break this down is I don't really see anything that makes me bullish or bearish. Sure, you could say, boy, the chart is incredibly bullish. AMD has been incredibly bullish, right? From a technical standpoint, I'm not really seeing, though, support resistance anywhere in the realm of where we are at. So, okay, so that maybe lends me to more of a neutral strategy. And then obviously, if we look at implied vol, okay, we have a really, really good range. And we need to make sure in whatever we do, we adjust for the IV crush. Okay, is everybody with me so far? Okay, so we just checked kind of the stock chart patterns off our list. Now, again, if someone sees something else that I don't see, bullish, bearish, neutral, whatever it is, let me know. Happy to look at it. Just because I'm saying that there's not much technical support, resistance, anything there, doesn't mean that is 100% the case. So we've done that. We looked at implied vol. We have not looked at IV crush yet. We didn't look at reward to risk. But before we do that, we've got to figure out, what is the market telling us? What is the market pricing in here? Okay, so here are AMD options. Here's an option montage. We are at 176 basically. So if we look right here and look for an expected move, what do you guys come up with? Thank you, David. You are right ahead of me. Right about a $15 expected move to the end of this week. Okay. Kent, you said 14. I could see that also. Okay. Is everybody with me on this? Everybody understand what we're looking at in this next step, this next progression of trying to figure out if there is going to be a signal or not. Great. Okay. So if we've got an expected range of roughly $15, and I'm just going to round this off, let's say our an expected move of 15, we've got an expected range, basically 160 to 191. Okay. Now, if you're bearish, you're looking for something to target 160. If you're bullish, you're looking for something to target 191. Well, the first thing that I'm going to look at, knowing that, to me anyway, there's nothing significant telling me bullish or bearish, okay? First thing I'm going to look at is an iron condor, meaning, can we price something out that gives us the appropriate reward to risk for a stock in this range? So if we're targeting 160 on the downside, okay, let's look at maybe the 165, 160 put spread on the downside. And if we're targeting 190 on the upside, maybe let's look at the 185, 190 call spread on the upside. That iron condor right there is selling for about $2.40. Okay. If we were going to sell this at $2.40, what would our break-even points be at expiration? Let's say we got a credit of $2.40. What would the break-even points be at expiration? Okay, I just put it up there for everybody. We're looking then at a range, a break-even range at expiration, 162.60 to 187.40. Does everybody see and understand how I got that? What I did was took the short 165 strike put, subtracted the $2.40 credit, which gets me to 162.60. And then I took the short 185 call and added in the 240 credit to get us to 187.40. Okay, so the way that I look at an iron condor is I typically like to get the break evens as close as possible to the ends of the expected range, which, going back, our expected range was 160 to 191. Okay, so This at $2.40 puts us kind of far away from the expected range, the expected move. Okay. Not only that, but for me, in an iron condor, okay, going into earnings for reward to risk, I usually like to see a 1-to-1 reward to risk. If it's not earnings, maybe a little bit smaller than that, 0.9-to-1, but a 1-to-1 reward to risk would be a credit of 250. David, do I ever look at the fair value of a company? How do we know what the fair value of a company is? The fair value of a company is what the marketplace is paying for it. I never look at that. Sometimes I might look at PE ratios on something. If it's drastically high or drastically low. So does everybody understand the reward to risk end of things? That A, for an earnings iron condor, I want 1-to-1. And that would be $2.50 here. Does everybody understand that? I'm not getting a lot of responses back here. David, I appreciate your responses. Maybe I'm missing some of the others. Okay, there we go. Okay, so right now, I'm done with iron condor. I'm going to say no chance. I am not trading an iron condor here. I just don't believe the odds are in my favor. Okay, doesn't mean we're not going to put a trade on. So then, for another move that I'm looking at for either direction, we're going to look right at that expected move range. And we're going to look to see if we can arbitrage selling this incredibly expensive implied volatility this week, which we know is jacked up because of earnings, and buy something next week, which is still very expensive, but perhaps not as expensive as what we're selling this week. Just like what we did in HIMS, which is turning out to be an incredible trade. And we have an upstart position like that on. It's called a double calendar or a strangle swap. Okay, so the 160 on the downside, 190 on the upside. We would look to sell that strangle this week and buy that strangle next week. Okay, that is trading for about $2. Okay, maybe a little less, $1.95-ish, let's say. And that is to buy both a calendar put spread and a calendar call spread. With the strategy, the thought process behind that is, where do we want a stock to go? We always want a stock to go to our short strike. Here we have two short strikes. So we don't care if the AMD tanks to 160 or rockets to 190. We don't care. We're looking for a move in either direction there, but that's going to cost us about $1.95 to put that position on. Is it worth it? How do we know? Is it worth it? Well, let's run a risk analysis. And what I will do on this position is just forward up the day to expiration. And if this was truly what your risk P&L showed you, and look here where you're making profit all the way from, let's call it 150 up to 210-ish. Would you do this? Would you do that? Sure, I would do this all day. I would do this all day. And an inexperienced trader might look at that and say, I'm putting that on right now. But before we go any further, what we must do is get Thor's word of the day, or today it's an acronym, and it's just easy, AMD. So let's get that up there for the wheel going here for a minute or two, and then we'll dive back in. Yes, before I turn back the page and we go to evaluate that, please smash the like button. You can be mad. You can be mad, Stephen, and still put in AMD. We'll accept it. Okay. I mean, if someone showed you this risk graph here, you're all over this. Is this real, this risk graph? Come on, guys. We need more than 33 likes. Let's get up to 50. Let's get going here. Let's get going. Come on. Hit it, hit it, hit it, hit it. Okay. What are we up to, Mike? How many likes? See if our people listening in actually like us. 43. That's not bad. Let's push it here, guys, before the end. Let's push it. Okay. What did we not do here, guys, to get a real P&L risk graph? We didn't do something really, really, really important. What was it? Thank you, Kent and George. Yes. We did not crush volatility, which we know with 100% certainty is going to happen. It will happen on the opening of the market tomorrow morning. So let's just look at where the vols were again on our volatility chart. And we know 55 top end, and we're going to call it 37, 38 bottom end. So where should we take this week's volatility down to? Okay, the puts right now are about 104 volatility. The calls, actually, there's a little bit of a skew on the call side. You can see the market is skewing a little bit to the upside here. Call volatility is a little bit more expensive. But where should we take the put side down to? Knowing what we have discussed in the past. Well, we always talk about somewhere, that front week, the one that gets impacted the most, typically goes down 45, 50%. 50% on this would be taking it down to a 52-ish volatility. I'm not going to take it down that much because I want to be conservative in my estimates. So I'm going to take it down to just 60. Thank you, Dave. Justin, perfect. And on the call side, I'm going to take it down to 65. Okay, again, I'm being conservative with my estimates. Now, the biggie, we always talk about this when we do our vol adjustments. The big one is to look at the long volatility, the vol of the options we are buying. Okay. So the next week options, we've got 71 on the put side. I'm going to take that down to 40, and I'm going to do the 38 or so on the call side. Again, I'm probably taking vol down a little bit more than we normally would, but that is to be conservative as well. Now let's run a risk chart. Now let's really run an accurate, or what we think will be accurate, P&L outlook. Now look at the difference. This is the exact same scenario as we just had with no vol adjustments. Now, perhaps I took things down a little bit too much in our long volatility, or maybe I didn't take the short volatility down enough. But this is a drastic difference from what we saw with no volatility adjustment. And if I went from all green on that bottom line on that last one, basically to this right now, there is no shot, no chance that I am doing this strangle swap. Does that make sense to everybody? And you can see what adjusting your volatilities do to your P&L. Okay, now we don't really have time to get into a calendar put or a calendar call spread, but what I'm going to say is based on this, which is the combination of both a calendar call spread and a calendar put spread, I'm going to say that neither one of those would model out very well. So for me, I ain't doing anything in AMD. I'm sitting on the sidelines because anything I do, either at least from our modeling, would not give us appropriate reward to risk, or it would just be a crapshoot. And it's perfectly fine to sit back and not do anything. Because why? Because we don't have FOMO, and because we know that there is always going to be another trade to make. But that, ladies and gentlemen, that is how I would go about deciphering whether to do something in AMD. And it's not just AMD. This is the process that I use, honestly, for any stock I'm looking at, any setup I'm looking at, whether it's earnings related or not. If it's not earnings related, we still want to look to see where the vols are, but we're probably not going to have the crush like we do with earnings right now. Okay, thank you, Dave. Pat, what do you mean that it is August? And while I'm waiting for Pat here, what I just posted up here, folks, I am actually doing a live training tonight, a live Webby tonight. Current market conditions, expected move, all sorts of things. So if you want to join, I just posted a link up there. Or if you have a friend that might want to join, please share that link. I just put that up there. And I will be going live at 7 p.m. Central Time. Gotcha, Pat. All right, everybody. Thank you. Yes, the link for tonight is pinned up there. All right, it is the wheel is definitely more crowded today. Good. That means, you know what? Before I spin the wheel, how many likes do we have? Did we get 50 yet? Mike, are we up to 50? 53. Okay, I was gonna say I'm not spinning if we don't get there. And I know today is the 5th, not the 4th, but that is okay. This is a brand new wheel. Let's get going. This is a busy one. I can't even look as the wheel is spinning right now. Holy smoke. Justin or Karen? Justin or Karen? Karen! Winner, 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 winner. Karen, are you in the house? Is Karen in the house? Got some congrats for Karen, but I haven't seen Karen respond yet. There you go. Way to go, Karen. Okay, we've got an email address up there for you to email me at with your swag size and your address. That's prosperswag@prospertrading.com. All right, everybody. I appreciate all of you. We'll see how this plays out. We'll see how AMD earnings are. We'll see, what may have been a good trade. We'll play that Monday morning quarterback after the fact. All right. But that's what I got for you. So thank you, everybody. Have a wonderful, wonderful day. See you tomorrow.